Hello everyone, welcome to Elliottwave.com YouTube channel. Today is November the 11th and the chart of the day for today is the S&P 500 cash. Okay, so here what we got here is a 60 minutes time frame, right? And we can see here we finished with 4 in the form of a WXY, which is a double zigzag or double 3. As you can see, we have a zigzag here, ABC, and then we have another zigzag here, another ABC here, right? And then they are linked, the two zigzags is linked by this WXY in the larger time frame. And as you can see, the way we measure the target here is just by simply using the Fibonacci extension Y, measuring it in terms of the W, and the area we are looking for potentially to find support is always going to be between 100% and 161.8%. Now it hit the 1.236, which is another Fibonacci number, right? And then it just starts to rally. Rally looking quite good, quite impulsive. So we're looking for continuation higher here, right? As long as we stay above this 66.30 over here. Okay. Now if I zoom out to give you a context, this 3 and 4S we've been talking for a while. If you follow our YouTube channel, we've been saying that the indices remain bullish, and the cycle that started from April low, April 2025, is still in progress. This cycle is mature, but we are looking for further upside to finish with 5, and this is where we are in the with 5 from April low, right? So if you copy let's say in the 3 and the 4 in the intermediate degree here, so we're simply looking for the last leg with 5 here to finish this cycle from April low. Now this wave 5 can always subdivide into yet another 5 waves like this, right? So it can subdivide. So it doesn't mean that, okay, once we make another high above 3 and we are done, right? So they can continue to extend and subdivide into yet another 5 waves in the lower degree, right? Which is exactly what we are looking here. So this is 1 in black, 2 in black, which is the minute degree. Once we finish 3, 4, 5 in black, that will only end 1 in red. So this is 1 of 5, and then we can continue to go higher after that, right? But so in the meantime, what happens here is that the bounce is coming from the expected area, which is favoring the idea we are still bullish, and then the rally also looks impulsive. Now even though we do still need to break above wave 3, okay, but currently we are always calling the more aggressive view in the direction of the trend. So as long as we stay above 66.30, we can see more upside. Now if we fail to break the new high and for some reasons do another leg down, then that means we're going to be doing a bigger WXY, and then you're going to be measuring the target lower like this, the next 100% extension, and then you can project what the next support zone is in case we fail and go down again. Okay, so always remember, it is about the extreme area. It's not about swing by swing trying to trade every single little swing, right? It's always better when you trade at the support zone, support area, because most of the time you're gonna get some reaction higher that allows you to maybe take partial profit, move your stop loss, and create a risk-free position as always. Okay, so that is the update here, guys. And the target to the upside, the minimum target can be always measured this way, which is using the 1.236 external retracement, which is around 69.87 here. And if you do want to get more regular updates on SPX or any other indices, stocks, Forex, commodities, feel free to check our service. We have 14 days trial, and the link is in the description of the video. I'll see you all again next time, and have a nice day to you all.